All right, so I'm being asked this week, what's happening with the markets, Jason? What's going on? How far is the market going to go down? What's it doing to the rates? What kind of impact is it having on the rates? And if you watched last week's episode of My Two Cents, then you would have some insight as to what I'm watching right now. And we're watching the coronavirus, or I'm watching the coronavirus very, very closely and the impact it's going to have on the economy. We've been on a 11-year bull market run on the stock market. Yesterday, we had, if we take the week in consideration, we had 1,100 point decline, the biggest one-day decline in the market in our history. We've had a 3,500 point correction in the market since the beginning of the week. And so far today, Friday, February 28th, 2020, we're down quite a bit. In fact, if we take today's down market and it closes right now, we will be over 4,000 point correction in the market. A lot of flight to safety into the bonds, taking out of high risk stock market stocks and putting it into bonds. That's driving that yield down on those bonds, as I mentioned last week. So the one thing I am watching very, very closely is this political aspect of the coronavirus. There's a lot of finger pointing going on right now, and that's kind of bad for the market. And here's why. It starts to affect the psychological aspect of the virus, if you will, or the population, the U.S. population, us, me. If I feel that my politicians don't have a handle on a solution for the virus, then I'm going to stay home. I'm not going to go anywhere. And if I feel that way, then other people may feel that way. And then you're not going to concerts or the malls or any other kind of high density population kind of thing. Don't want to hit air travel. We've seen the airlines take a hit on their stock prices as of recent. Cruise ships, obviously, are taking a hit on their pricing in the stock market. And so that's money that's taken out of circulation. And when we see that, that's definitely going to hurt the economy. The big thing right now is we don't know. It seems like the coronavirus is hitting the young and the old, not so much the healthy population, but we don't know. We don't know how it's transmitted, and we don't necessarily have a cure for it, which is the big unknown. So we don't really have a handle on it. So watching this very, very closely as it is affecting the bonds and the yields and the stock market in general and the psychological aspect of our economy. The other thing that came out today was the core CDP. So I'm watching that as well. It didn't come out as good as expected. It was expected to be at 0.2% up. It came out at 0.1%, so 0.1% up. So no real fears of inflation. That's a good thing. But the coronavirus and the unknown with that's definitely driving the rates down. How far will they go? I don't know, but I will say this, that the Federal Reserve is 100% going to reduce the interest rates. The only question is by how much and when. Right now, the markets are saying that the Federal Reserve will reduce rates next month, March. Will it be a quarter? Will it be a half? I don't know. But as I said in my last one, I said that the Fed was going to cut rates. And some people kind of laughed at me for that, but it's going to happen. There's even some predictions that by the end of the year, we could see the Fed cut the interest rate by as much as 1 full percentage point by the end of the year. That's going to be really good for mortgages. Mortgage rates. So there could be some refinancing opportunities in the future. So if you're on that fence, you might want to start positioning yourself so that you can refinance here in the very near future. And if you need to do that, reach out to me. I'd love to help you. Until then, that was my